Views expressed by Camaplan podcast guests may not reflect those of Camaplan. Camaplan does not guarantee the accuracy of information provided by guests, nor does it endorse or recommend any individual or organization. Camaplan is not an investment advisor, CPA, realtor, or attorney. You are encouraged to conduct your own due diligence before making investment choices. For any tax, legal, accounting, investment, or other questions, please consult a specialist. Hi, I'm Michael Duncan, and welcome back to The Road to Financial Freedom. This podcast is brought to you by Camaplan, a self-directed IRA administrator focused on educating investors on how to grow retirement savings faster through alternative investments. In each episode, we're going to take an in-depth look at the many roads taken to financial freedom and how they differ for each of our guests. Our goal is to help the listeners learn how they can achieve their own financial freedom through the experience and stories of experts that have done just that. Today's guest is the co-founder and fund manager for Meriwether Group Capital. He started Meriwether Group Capital after 27 years in commercial banking and focuses on providing growth capital to growing, profitable businesses. I'm very excited to welcome Jamie Shulman to the show today. Jamie, how are you doing?
I'm doing great. Happy Friday.
Happy Friday. Of course, our listeners will unfortunately be hearing this most likely on a Monday, but just know that Friday is only a few days away. Jamie, I'm thrilled to have you on here today. I'm thrilled to get the chance to talk to you. And I'm really excited to dive into Meriwether and what you guys do there, what you do, what led you there, the whole story. So if it's all right with you, I would love to start with those 27 years in commercial banking. How did that happen for the first time? And at what point did you start to realize, maybe you were seeing a shift away from what you wanted to do?
Sure. Great question. So I, as a background, I grew up in a banking family. My dad was a executive in the banking world for, I think, 25 plus years. My sister was in the industry. So it's kind of, I guess, our family blood. And so I spent greater than 25 years working with a couple larger banks and then a couple community banks, really helping entrepreneurs and small businesses. And, that's my passion. And recognize that debt is a very powerful tool when used correctly. And so that's kind of my whole background. Something that I kind of appreciated, though, along the way was there was a population of what I thought was kind of an underserved niche of businesses that needed access to this kind of capital that were just kind of on the edges of what banks like to work on. And it didn't make them kind of lower credit quality necessarily. It just meant that they didn't fit kind of in the banking box. And they really needed someone to spend more time and attention with them. And then on the opposite end of that, they needed to get paid for the risk too. And banks, which are, have their own kind of credit box and are highly regulated, it's not a criticism, but they're just not set up to work with businesses that are just kind of on the edges of this. But there's lots of these kinds of businesses out there. And so we thought, well, maybe we ought to form a business doing just this. And that's what kind of was the idea behind what formed ultimately Meriwether Group Capital.
So I'm trying to think of a good way to phrase this question. So you found this corner of the market sort of that you're realizing is underperforming or underutilized even. Mm-hmm. How hard was it to convince others that this was something that would be worth their time and investing in, and that it was an underserved corner of this market?
Yeah. Well, I quickly found two other like-minded individuals who shared this same feeling. And so it was actually pretty easy once we got kind of on the same page with what we wanted to do. So my other two partners I work with, one is an investment bank, and they work with lots of fast-growing businesses that are disruptive, often looking for an equity transaction or a full exit, but maybe need someone to come in and help bridge that timeline. And so there's a shared feeling like this is really important stuff we're doing. And then our other partner is the parent company of a commercial bank. And they too saw the value of what we're doing, but because of their own limitations, couldn't make these loans directly, but saw the value in doing it. And so, when we got our heads together and said, okay, this makes a lot of sense, it was pretty easy to understand that this was a good idea. At least we perceived as a good idea. And, in reality, we have vastly underestimated the marketplace for these kinds of loans. And this is, over a year ago, before there was kind of a growth of economic uncertainty. Regional banks had their own challenges, which we can speak to. And as a result of that, loan demand for us is very, very high.
So how quickly did you realize that you underestimated it?
Well, on day one, when we opened our doors,
Okay.
we were getting calls that, were kind of coming out of the blue. And so, we work closely with other commercial banks. We're a very friendly partner to them, not a competitor to them.
Mm-hmm.
We're also very friendly to investment bankers who are working on equity types of transactions. And then we also partner with other kind of venture debt and mezzanine commercial lenders who might run into things that are too small for them.
Mm-hmm.
So we really focus on loans, 500,000 to 5 million. These are operating businesses with a track record of success. They're profitable or EBITDA positive companies that often are just trying to grow a little bit faster. And there's just not a lot of kind of alternative types of private lenders who want to focus on this space, which, I can understand and we can get into. But so we thought that there would be demand here. Anecdotally, we try to do about one loan a month. So we're a very small shop. We look very closely at each of the loans we do. And for every one loan that we do, when we started, we were getting about 10 inquiries per month, which, that's pretty good. So we're having to unfortunately say no 9 times out of 10, but doing one that was good credit quality. Fast forward to today, which we can talk about kind of the whys behind it, we're looking at about 20 per month.
Wow. Okay. So yeah, definitely underestimated. As soon as you said day one, I got a little worried. Obviously it turned out fine, but I would have been quaking in my boots. So what can you please get into, I guess, why there isn't more people that want to operate in that space? You mentioned
well, I mean, that's a very good question. I think, so first of all, we're a small business too, and we're somewhat a startup too. So I totally get it. So, I think in many industries, banking is, or lending is certainly one of them too, is as you start to grow, there's a natural tendency as you add overhead, people, facilities, et cetera, you need to start to move kind of quote up market in terms of the types of clients you're working with to cover your own expenses. To a lesser degree, I think in some industries, and banking is certainly part of that, there can be some level of kind of ego around, hey, it sounds more fun to do a $100 million loan or a $10 million loan than it does to do a $500,000 loan.
Yeah.
Well, that doesn't mean the credit quality is necessarily any different. And so I believe part of our secret sauce is, first of all, we get a lot of looks at good companies based on kind of who we are. And we can very efficiently, in my opinion, do these smaller loans in a way that makes sense for the borrower, the investor, and ourselves. So we kind of market that we do loans 500,000 to 5 million. The average loan on our books today is about 1.5 million. And we're very happy to do loans in that space. And we see lots of good looks like that frequently.
Interesting. And now, in my preparation, you sent me some information, and one question I had was about the Meriwether Group Capital Hero Fund. Could you just talk a little bit about what that is and why it exists?
Yeah, so we have kind of two sides of our balance sheet. So on the asset side, we make loans. That's kind of that's our primary business, and that's where we engage all of our time. So banks can make loans typically based on their ability to bring in consumer and business deposits. That's their source of capital. So we're not a bank, so we don't bring in deposits.
Got it.
So we created a fund. It's called the Hero Fund. It's what's called an evergreen or open-ended fund where we seek investments from accredited investors who are looking for really an income style return in exchange for, in my opinion, a modest degree of credit risk. So we're working with accredited investors in all states except Washington, where they need to be a qualified purchaser. These are typically high net worth individuals or families. We can work with institutions as well. And they're looking to kind of pool their resources and spread it across a portfolio of these loans. And so this is, first of all, this is not a growth fund. We're never going to have huge upside, downside opportunity. Our goals are all about preservation of capital and then payment of a recurring income stream, which we do via a distribution quarterly. So we have a target return to our investors in the fund of 10% annually. We pay a distribution every quarter. Our investors can get the return either in cash or most just add it back to their capital account. And we're really proud of the fact that we've exceeded our target return every quarter since inception. I know that every quarter only means 4 quarters for us, but we're on track to continue to do that. And based on our pricing discipline, we expect that we should be able to continue to do that.
I mean, every quarter is still better than every quarter but one. So
there you go.
100% is still 100%. So I can definitely understand how that kind of fits into the realm of alternative investments. And why, for instance, why you're on this show. Camaplan is a self-directed IRA company, and we thrive with alternative investments and allowing people to use their retirement funds to invest in alternative investments. Could you talk a little bit about that fit within alternative investments, and maybe even dive a little bit into the self-directed side of it all?
Yeah, absolutely. So, I'll start by sharing kind of who is this a good fit for, and what does our typical limited partner or investor look like? So these are typically, like I said, high net worth individuals or families. We do have a few business entities in the fund, and we're actively looking to grow it, just so you know. This has proven to be good for those who have either excess liquidity, they're kind of maybe not sure where to deploy, or they might already have some fixed income or quasi-fixed income assets like treasuries or municipal bonds or maybe even bank CDs, things like that. And here's a way to take maybe a portion of that and allocate it into a higher yielding alternative investment in exchange for a modest degree, in my opinion, of credit risk. And now instead of a return of, let's say, 3 or 4%, you've got a blended return of maybe 5 or 6, something like that. And so that's proven to be good for those types of investors. We also see, because our loans are really commercial loans, they're not commercial real estate loans, we do see some investors who are looking to diversify away from other asset classes like real estate. And so here's, there's not a lot of investments that have a small portfolio of commercial loans in it, where the fund manager has, ongoing working knowledge of every loan within the portfolio. I mean, this is not thousands of, credit cards or student loans or things like that. Yeah. We know every one of our borrowers really well, and we stay very close to them. And as a result, credit quality is, good, and we know that. And so that, I think our investors really appreciate that as well. We can work with taxable accounts as well as retirement plans. And so self-directed retirement plans are a really good partner for us. We have worked with several of these, and we're proud to be a partner with Camaplan. And for those who want to control their own retirement plan, I'm a big believer in self-directed IRAs and other like products. And this is a permissible investment within it, and we think it's a good fit. Certainly this should never be 100% of someone's investment plan, but I think there's a portion that makes a lot of sense for those who want kind of some of that yield opportunity, working with small businesses, and it can be very complementary to kind of the rest of someone's portfolio.
So, obviously for anyone that is thinking about investing in something like this, especially with their retirement funds, there has to be a certain level of understanding and trust when it comes to what they're investing in. So when you guys are bringing in these small businesses, these, the niche that you guys are in terms of, the $500,000 to $5 million, correct me if I'm wrong. But how do you decide whether or not, what is the process you go through to determine that this business is a fit and something that you guys, believe in enough to invest these people's money in them?
Yeah, so great question. So we take underwriting very seriously, and we take what I would call a very holistic approach to vetting our prospective borrowers. It's really a combination of traditional financial analysis. So we're looking at P&L statements and balance sheets and reviewing them over time, and what does the future look like, and then really combining that with a combination of really face-to-face,
Yeah.
in-person meetings with the owners, the management team. We go, and I did this just earlier this week with a prospective borrower. We go walk the machine shop floor. You can learn a lot about a business by how clean or dirty their manufacturing plant is, not at the beginning of the day, but at the end of a shift.
Yeah.
And, that tells you something. You can't see that on paper.
Yeah.
And at the end of the day, I learned a long time ago, you need to be able to kind of look into the whites of someone's eyes and just know if they're going to pay you back. And, this is,
Fair
I'd
point.
say there's a lot of science to lending, but there is some art to it also. And so you need to really combine those with, the traditional kind of underwriting analysis. And the combination of those things is really, I think, what leads to good credit quality for us. I would also just add to that our underwriting does not stop when we close a loan. We are collecting financial reporting in most cases every month from every one of our borrowers. So we know how they're doing over time, all the way through until maturity. And we don't just file the documents away. We actually look at them, get on calls or in person with our borrowers and see how they're doing. And that gives us comfort, not just when we're originally underwriting the loan, but all the way through until we get paid off.
Yeah, I mean, it seems like for the investors, it is able to be a very passive investment. But for you guys, at Meriwether, like, you're not treating it as a passive investment, at least not in like the most simplest terms. You're definitely, like you said, you're checking in, you're talking about the reports that you're getting because you want to make sure that, they're not just coasting.
Yeah. Yeah, we are not just a book a transaction and forget about it shop. We're actively engaged, and our borrowers know this. And I think our borrowers really appreciate the fact that we're, I always try to be in what's called that circle of trust, with our borrowers, or center of influence. And so we try to help our borrowers, not just kind of with their lending needs, but then we also try to be there as a resource to them, as they're, these are companies that are often growing fast. They might need help with other things that we can't offer. Who's your CPA you recommend, or an attorney we need for this or that, and we can be a resource to help with those things as well. That's not how we get compensated. It's just the right thing to do, and then to help solidify our relationship as well.
Because why not do everything you can to help them succeed? I mean, at the end of the day, if they don't succeed, you don't succeed.
Absolutely. And this is, we're very passionate. If you haven't figured that out yet, we're very passionate about entrepreneurs. We appreciate the challenges of the kind of quote entrepreneur's journey. We're in the same boat ourselves. We're a small business that's growing. And so why not help entrepreneurs in every way you possibly can, and that's really our passion and our focus.
Couldn't agree more, especially that bit about, looking in the white of someone's eyes and knowing that they're going to pay you back. I'm sure that's an ongoing test is the wrong word, but an ongoing thing that you have to monitor as you're going through these reports and all that. I wish that was something I learned earlier in life. I lent a friend of mine a Pokemon card in elementary school. I never got it back. He said he'd bring it back, and
there's still hope. You never know.
It haunts me to this day. Hopefully he's listening to this. He brings it back, but I'm not counting on it.
I hope you collateralize that well.
Thank you. So one thing that I believe in very strongly, and I talk about a lot on this podcast, is the idea that when you're venturing into these types of things and you're exploring these new ventures, that a lot of the time you learn more not from succeeding but from failure. And I'm curious if anything comes to mind that you've been through where you made a mistake, or looking back, you might have done something differently. And obviously, no one wants to screw up, no one wants to fail. But can you think of a time that you were able to learn something that you might not have otherwise learned if you did?
Yeah. So that happens pretty much every day.
So I like to hear.
I mean, I guess, as I think about kind of lessons learned in just the short time we've been in business. So, the biggest lesson I learned is really our underestimation of the size of opportunity in this space. And if I could turn back time, I probably would have invested a little bit more time out of the gate in ensuring we had sufficient capital to fund every good loan that we possibly could at inception.
Mm-hmm.
How it works today is, our assets under management today are pretty well deployed fully into loans at all times. So our ability to make a new loan is really based on either an existing borrower paying us down or paying us off, which is fairly predictable because we set a schedule that we
Yeah.
can pretty much count on, or bringing in a new investor, or we do have investors who add to their existing capital accounts, which we're happy to do. And but those, if those events are not happening when we want to fund a loan, we need to tell the borrower, hey, we can make a loan to you, but you might need to be patient, and we'll fund it when we have the liquidity to do it. And I don't really like to operate like that. I
Yeah.
would much rather we had sufficient liquidity to do everything we could so that we could take advantage of every good opportunity we could.
Yeah.
So, if I could turn back time, maybe I would have worked a little bit harder to have more capital out of the gate. Now, having said that, we're proud of the fact that we started at zero. We have about $12 million of assets under management today. I think we have about 35 investors in the fund, and we're actively looking to grow that. And, just a quick plug, Camo Plan, self-directed IRAs are a great way to do that. But, we're always looking for more. And that's a little bit lengthier process than finding loans, which is relatively easy given kind of our time in the industry.
So what is that, what is the response like when someone when you have to tell someone like, "Hey, we're really interested, but just we can't do it at this given time and we don't necessarily always have a time frame that we can give you."
Yeah. So we try to operate with a very high level of transparency and open communication and honesty. And the last thing an entrepreneur wants to hear is, yes, we can do something, only to be told down the road that no, we cannot. And I
Yeah.
am not okay with that strategy. So we're very open with our borrowers right out of the gate. I work very closely to understand what timelines and deadlines a borrower might have for getting access to capital. And if there's a hard deadline, let's say it's maybe they're trying to acquire another company or buy a piece of equipment that has a must get paid by date. And if I don't think we'll have the liquidity by then, I tell them.
Yeah.
And I can usually route them to maybe another lender in the industry as another resource, or help them in a different way. So we do best, it seems like, with our borrowers, and a majority of requests we get are what I would call permanent working capital in nature. So companies growing fast, they're profitable, EBITDA positive, and they're just trying to grow a little bit faster by maybe expanding a client relationship or getting into a new geography or product or something like that, and they need some capital to do that. Well, those things don't have as hard of deadlines, and that's where
Mhm.
we tend to do better because we can, advise a borrower, hey, we believe we can close by a certain date, but if we need to push it a little bit, is that okay? Or could we divide up the advances of a loan into maybe a third of it in each of 3 months or something like that, so that we can get to a yes, as many times as possible and get creative. We do have a few of our investors also that have expressed an interest in not just being in our fund, but also co-investing in specific loans with us too, being basically a participant. And so we can get creative around, working with people in that way as well.
Interesting. When you say co-investing, can you just elaborate on that a little bit more?
Sure. So our right now our limited partners are investing in our fund, which is a
Hmm.
portfolio of loans. They're not picking and choosing specific loans to invest in. So their investment is spread pro rata across our entire portfolio. Co-investing or participating means that someone is lending alongside us in a specific loan.
Gotcha.
So,
Okay.
the upside opportunity for someone co-investing is a higher yield
Yeah.
because that's before our expenses and our, how we get paid. But there's also heightened risk because that's an investment in a specific loan versus a portfolio.
Absolutely. No, that makes a ton of sense, especially for something that, maybe someone is very passionate about or
Mhm.
knowledgeable about. And speaking of that, without, naming names or anything, is there any specific business or something that has really caught your interest or something that's just, maybe it would blow me away a little bit that, all these, I don't know, a trampoline park or something,
Yeah.
exciting in a way.
Yeah, so there's lots of them. Depends on how much time you have. I mean, so first of all, I would share that anyone listening or watching this can go to our LinkedIn page, Meriwether Group Capital. We do post press releases on all the loans that we close. Our
Okay.
borrowers are all okay with this, so you can kind of scroll through and see announcements on any of these. A couple maybe I would share. One of the companies we're really excited to partner with, where we've made a loan, they've paid us off, and now we've made another loan to them, is a company called Sackcloth and Ashes. They're a company based in Salem, Oregon, not that far from here, where I am in Portland. They make blankets, very high-end blankets. They sell directly through their website. They also work with retailers such as like REI. You can find them there.
Okay.
They are a mission-driven company in that for every blanket that they make, they also donate another one to a homeless shelter.
Wow.
And at least here in Oregon, that's a big issue.
Yeah.
So we're super excited. It's not why we made the loan specifically. I mean, they generating, cash flow to be able to repay us, but it's just kind of one more thing. We're super proud to partner with them. I'll just put in a very shameless plug for those guys. They launched a program recently called Change Agents, where they're signing up professionals who like to use gifting programs to get blankets out to their clients, like realtors when they sell a house. And this is a great program. You can find it on their website. You can find out more about their company through our LinkedIn page, things like that. And so, this is a growing company. We're super excited to be able to support them. And it's a good relationship, both ways.
That's awesome. I'm glad I asked. It's fascinating. I think talking about this, loans and, funds, and it creates a very specific mindset, I feel like, of the type of, businesses or whatever. But it's cool hearing about all the different types that there are. And I'm probably going to go and just, scroll through those press releases out of interest.
Right.
But before I let you completely plug yourself and tell the listeners where they can find you, one question I ask everyone who comes on the podcast, because I love hearing all the different answers, is simply, what does financial freedom mean to you?
That's a great question. I guess, financial freedom to me means you don't have to worry about where the sources of revenue are coming from to be able to support what you want to do in life. And I'm a big believer in passive investments. What we're doing is a passive investment for our limited partners. They're not actively engaged. They don't have to worry and think about it a lot. We're kind of what's called a coupon clipper. We're sending a check or adding to their capital account every quarter. And as individuals, and myself included, kind of continue to grow their own nest egg and portfolio, the more assets they have in this that are generating recurring income, just says, hey, I can predict what my income is going to be without me having to necessarily work at it, which, I'm actively working at it right now with the goal of being more of a passive investor over time. And that's kind of what financial freedom, I think, means.
I think that's a great answer. So Jamie, please tell the listeners where they can find you, where they can find more information about you and Meriwether. And all of this information will be in the linked in the description of this episode.
Great. So you can find us really in kind of a couple ways. We do have a website, meriwethergroupcapital.com. We also are pretty active on LinkedIn, which is kind of the other good source. We do, like I said, post all of our successes with our portfolio companies. And both of those have ways to get to me directly. And for people who are interested in learning more, I'm really the primary contact there, and happy to get on a Zoom call, or for locals here in Portland, get together in person. And we do work with investors really all over the United States.
Awesome. Jamie, thank you so much for coming on today. I had a wonderful time talking to you, learning more about something that I personally did not know a lot about, and I'm hoping that the listeners feel the same way. It sounds like what you're doing over there is incredible, and you've only been at it for a short period of time, all things considered. So I look forward to learning more about you and hopefully talking to you in the future.
Really appreciate the time, and happy Monday by the time people watch this.
Yeah, happy Monday. Absolutely. And as always, thank you for listening to The Road to Financial Freedom. If you enjoyed this show, please support the podcast by remembering to rate, review, and subscribe. You can keep up to date with us on Facebook and Instagram at Road to Financial Freedom Podcast. Thanks again, and I will talk to you next time. If you like what you're hearing on The Road to Financial Freedom and want to learn more about self-directed IRAs and 401ks, click the link in the description to download a free toolkit with everything you need to get started.